Good afternoon, everyone. Mike and Corey here today. We're going to have three topics. We're going to talk about ASML earnings, which is a company that Corey closely follows, which I really do like this company. We just haven't added it to our official models yet, but I could see at some point. And then NVIDIA, which is in our models, and unfortunately suffered a bit of a setback today. Or yesterday or whenever they announced it. But as far as their stock is down and actually causing the overall NASDAQ to pull back. And then I'm going to talk about the next level of tariffs, some more information on that. Maybe it's good news, maybe it's bad news. It just depends on who you are, where it fits. So as we do this, this is a financial education presentation. You must do your own due diligence on anything that you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So take it away with ASML, and don't assume that everybody knows what they do, because I bet you most do not. Please just do a quick brief. What does ASML do? Because it's very interesting.
I'll absolutely do that. And just really quick, because today is kind of the semiconductor day, I did want to just highlight where we are kind of in the semiconductor sector, broader semiconductor sector. One of the top two ETFs there, or funds that tracks that sector, is the SMH, and there's the other is SOX, SOX. But Mike, whenever the semiconductor index is having a bad day, in SMH, I'm just thinking like, oh, shake my head. Have you ever, that abbreviation?
Oh, we have so much exposure to semiconductors, and I do like the hardware side of things. So the Apples and NVIDIAs that produce hardware, as opposed to always everything being software, the Facebooks and the Googles, and I know there's some things they do as well, but I don't know. Plus I really appreciate our American semiconductor business.
Yeah, absolutely. So what I really wanted to highlight here is the semiconductor sector peaked last July, and has performed, as you can see on the chart from there. Can the bull market return and rage on without semiconductors? We did see some of that in November, December, January, before February, right before the market peaked. But honestly, we will need the semiconductors to perform at least in line with the market if the market, that bull market energy, is going to really return. But anyway, some current news. So NVIDIA announced yesterday, so it wasn't their earnings, but kind of a pre-earnings announcement, that they will record a $5.5 billion charge tied to H20 processors exported to China. I'm going to dig into that one more slide here. So, and then of course, going into Wednesday, semiconductor stocks sank Wednesday after NVIDIA and AMD, both AMD smaller number, but similar announcement. They both warned they would take a hit after the Trump administration moved to curb chip makers' exports to China. And there was the chip maker said it was informed on April 9th that it required an export license for the indefinite future to sell its H20 chips to China. The license is meant to reduce the risk that the H20, which is less powerful than NVIDIA's latest chips and had been tailored to meet U.S. export restrictions, ends up in a Chinese supercomputer. Okay, a couple things to think about here. NVIDIA specifically, this does get to about 13% of their revenue. And further than that, it could squeeze some margins. Also, these things change daily. Yep, these things change daily. It's a fluid situation. And, would I be surprised if these things are negotiated or lifted in the coming days? I wouldn't be surprised at all. But NVIDIA did the right thing, pre-announced, and the stock did take a hit today, somewhere in that 6-7% range. Now going over to ASML. Now we do get real earnings. ASML did announce earnings today, this morning, and they met on revenues. A good earnings report, good company. but they missed on order expectations. Some investors read into this thinking it's a negative kind of forward-looking thing. Some people think of it a little bit more kind of like a Boeing situation where they have a huge backlog of orders. So it's like if one quarter has really good or weak future orders, it's not really that big of a deal because the backlog is so deep. So, to each their own on that. But I did want to highlight, this is what the CFO said in an announcement that was tied to their earnings call, or their quarterly earnings. He said, there's this new uncertainty around tariffs, and like many experts, many businesses are explaining this is, of course, something that we do not know how to quantify yet. Does that sound familiar? Uncertainty? Seems like it. But this is adding definitely uncertainty on the long term. He mentioned 4 categories that the tariffs could impact. So shipments to the U.S. This is not a U.S.-based company. It's, I believe, the largest company in Europe. Tariffs on imported parts and tools. So, materials they're using. Material imports required for its manufacturing in the U.S. And tariffs from other countries on U.S. exports. He said, we're actively working with the entire ecosystem to try to minimize the overall impact. Mike, one thing that you're going to start hearing, if not already, and this goes for all of us, these companies are going to do everything they can to protect their margins. These companies are creative, given some time. Oh, and on top of the creativity of the companies, the tariffs have, dare I say, been a little bit haphazard as they've been implemented. So given time, these companies will likely find some creative loopholes and solutions to avoid some of this impact. Of course, not all of it. He did add, the CFO added, it was too early to discuss what extent of impact tariffs would have on global GDP and total market demand. So it's a bummer, but not the end of the world. And that's really it from their perspective.
It seems like after yesterday, we talked about Jamie Dimon saying that companies are going to pull their guidance. This is the tariffs is the new universal, the dog ate my homework answer for CEOs. What is your forecast? How are you doing? I can't tell you because of tariffs. It's that excuse. Hey, I get it. I mean, I've been in companies and there's always uncertainty with forecasts. There's always, unknowns, but, you're going to have to put some numbers out there and be graded against them. So, it's funny that we talked about that just yesterday, and there you're seeing it today.
Well, and yeah, there's going to be a slew of that, right? So
Yep.
That's what we expected.
Yep. So I'll continue on tariffs a little bit, and now here's an interesting effect. And if you're out there in the market looking to buy a car, either new or used, inventory is falling, supply is falling. So, cars that would be imported, companies are waiting to figure out how tariffs roll out. It's causing kind of a maybe a little bit of a panic. I actually drove by a dealership the other day that had an advertisement out. It said like tariff-free vehicles. So it's like, they're starting, the automotive companies are starting to promote, like, here's your chance to buy it without the tariff being added. When that inventory falls too far, then the prices start to go up, right? If there's not enough vehicles, people are starting to bid on what's out there. And guess what? That's an effect of inflation. So anyways, I saw this. And then the other one that I saw, and this is one that I mentioned, that it may be good news or it may be bad news. So latest tariffs have only generated 500 million, well below the 2 billion a day that Trump had expected. So while, part of you might say, well, we're getting less money out of it, that's bad news. I'll give you the good news side of it. If we're getting less money out of it, it may be like, okay, maybe this is not a great tool. Maybe it's just a negotiating tactic. Let's get some concessions from our trade partners to make their tariffs, the tariffs they put on us, the United States, a little bit lower. and then maybe we can go back to business as usual. I'm sure Trump is not going to leave this and just give in and say we'll let you keep the tariffs on us and we'll drop ours. But this is an effect, because guess what? If this had come in and said tariffs generating $2 billion a day, I think, who knows, Trump might double down and say, hey, well, these are clearly working. Let's keep these things going, because we're going to save the U.S. taxpayer a lot of money. So anyways, I kind of saw I actually saw this as good news, that they were below estimate. So with that,
hey, Mike, look at that headline up there. Click on. We got caught in the middle of our show with a headline. So
yes, headline just came out.
So Powell indicates tariffs could pose a challenge for the Fed between controlling inflation and boosting growth. I can speak to that a little bit. You know, in 2020, the government saved us, and they also trapped us at our house too, but saved us as well, the Fed as well. In 2022, from inflation, the Fed, we were kind of battling the Fed, but they were trying to help us. In 2018, the Fed tried to help. They were lowering rates, I think, famously on December 26th of 2018. Usually we can count on some of that backup support if things get a little nasty. And he's mentioning here that in this scenario, you could get inflation readings, right, due to the tariffs, but also the employment hadn't budged a lot yet. So if people get a little more scared, the Fed is sort of hand-tied, at least for now. Is that your understanding, Mike?
Yeah. And I just always keep in mind, the market goes up in the long term. And so when you see this kind of thing, you see uncertainty, you see this, it's a chance to at least look for things on sale. I get it. You don't want to just close your eyes and buy whatever. But as far as it provides opportunity. When I feel like we really should get nervous is when everybody's slapping high five saying, I cannot miss making money. It's so easy. That's when you get your big corrections. I always heard the market goes up when you ride a wall of worry. So
yeah.
That's where we're at.
We got the worry. We're building that wall right now. We're building the wall.
All right, we're building the wall. That could go a lot of different ways. So with that, we'll close, and we'll be back tomorrow. Thanks, everybody. Bye.